What's up, everybody? It's Brandon Gingelbach here. Welcome to Leaders Online. I'm the president and CEO of the Fort Worth Chamber. In case you didn't know, it's hot outside. Here it is, 95, heat index of 108. So praise the Lord, we're here inside. We got a great program today that we're going to chat with you about. The theme is cyber risk. Where are we headed? So we've got two great individuals who are going to help us with this. First, I'm going to introduce our moderator who's going to help with questions. Jeremy Park is in the house. Hello, Jeremy. If you don't know, Jeremy is the CEO of cityCURRENT. He's going to field questions for Gray. cityCURRENT, if you don't know, is a philanthropic division of Higginbotham. And today's program is presented by Higginbotham. And here to help us with this conversation on cyber risk is Gray Holden. Gray is the managing director with Higginbotham Insurance and Financial Services. He's the practice leader in management liability across many industries. And his primary expertise is management and executive liability, professional liability, cyber risk, and non-standard financial coverage. He's also a big women's softball fan, as we came to find out. So without further ado, Gray, we're going to hand it over to you. Thanks so much for being here today.
Well, thank you very much. And I know it's probably not very popular in the Fort Worth area, but I do have to give a shout out to the Sooners, my alma mater, for their softball performance this weekend. It was a rather exciting tournament. But thank you all very much for joining us today. I want to have an interactive presentation with you. I've got a short slide presentation. I want to walk through some trends. I'll go through the agenda here in just a second. And then we're going to open it up for questions and answers with Jeremy, because I expect you guys will have a lot of questions and interest based on what we see happening in this particular risk marketplace. So with that, I'm going to go ahead and share my screen here. Our agenda today, we're going to go over a very brief coverage review. I don't want to bore anybody with insurance speak today, but just want to talk generally around what's available in the insurance marketplace. And then we're going to spend a reasonable amount of time in some, talking about current trends with regards to claims, what's happening in the costs environment for these types of claims, and then what's happening in the insurance marketplace as a result. We'll hit on a few key security considerations. I will tell you right off the bat, I'm an insurance professional. I am not an IT security consultant, so I will do my best to share any relative experience that I've had with security consultants. But if we get too granular in the technology aspect of it, I may have to defer and follow up with you on those questions. And then, as I mentioned, I want to wrap up with our Q&A, which is probably and hopefully the meatier part of our discussion today. First and foremost, on the overall overview of cyber coverage, these policies are really set up in two main parts. We have what we call first-party insuring agreements, and we have third-party insuring agreements. And if you think about it, first-party exposures are those exposures that you have to your individual businesses, your individual employees, and your overall individual networks within your IT infrastructure. Your third-party insuring agreements are going to apply to damage or financial harm that your networks, people, and businesses can cause to other people. And so if you think of it just in those two broad categories, that's going to help guide the conversation anytime we're talking about specific types of claims. Examples of first-party type insuring agreements are going to involve your data breach expenses, forensic analysis, which is a large expense. You'll see here some more information on that in a second. Incident response. There are panels of groups out here, especially connected with the insurance professionals and underwriting companies, that will help you in the event you have an incident and need the response support. PR expenses, business interruption, data restoration, all the way down through ransom and cybercrime, which we're seeing a lot of activity in these days. So effectively, those are all financial or software type risks to your business as a first party element. On the third party side, typically what you're looking at are in the event your networks get breached and there is a loss of data, and that data is used to steal someone's identity or apply for loans on their behalf or creating them a financial harm, that type of exposure would come back to you as a third-party liability and is covered under these types of policies. Important on these types of policies also that's not typical is the cyber risk coverages can provide protection against regulatory fines and penalties. So if you're in a retail space, you're very familiar with what PCI fines and penalties are. That has to do with payment card information and the requirements that are around point of sale systems. If you are not in that industry, there are still other regulatory fines and penalties that you can face by not protecting your overall network and the data included on that. And then media liability has to do more with things like advertising injury from your website or other electronic communications that you may open up to the public. As far as some of the trends and what we're seeing today, and I'll cite a couple of markets specifically here. Beasley provided us this information. Beasley and Chubb, you'll see throughout this presentation, they are two of the larger markets in this space. Not to go through this individually with each of these, but the trend you'll see here is through 2019, we're seeing a significant increase in ransomware claims. We're seeing an increase in the ransomware payments that were made, and the total cost of those increasing by as much as 228% through 2019. The $178,254 average, if you were to carry that through March of 2021, that average has gone up to 225,000. So definitely seeing an increase in both severity and frequency for ransomware type demands, and the overall extortion amounts paid continue to multiply. From an overall type of incidents perspective, if we break down the types of claims we're seeing or types of incidents that we're seeing, the predominant incident has to do with, a social engineering type case, and that there's many definitions for that, but effectively what that means is if a hacker gets into a system, tries to assume either someone else's identity or shadows their email and purports to take out or purports to be them and take action on instructions to pay or instructions to change information that ultimately winds up in a claim. The next would be malware. Both of those, the social engineering and malware, are typically introduced by email scams and clicking on links or documents that we shouldn't be clicking on. Human error is a big part. We've got about 17% and just simple mistakes that are made by our employees. The third-party hacking, there is a very active network of cyber criminals, and I don't see that number going down anytime soon based on the dollars that are included there. Other categories in the smaller end of that, we look at misuse, physical breach, and then a category of unknown. Looking over to the right side of this slide, if you looked back to 2012, the incident rate from then to today through, I should say, the end of 2020 has grown at 550%. That's pretty staggering. But thinking of the element of technology and the element of remote networking and all of the various types of not only applications, but devices that we have connected to our various computer networks within the business, not surprising. But again, this trend is somewhat concerning as we look at it from an underwriting perspective. Types of industries, and I thought you all might be interested in these two particular data points because a lot of times when we're evaluating this, most people would think that healthcare industries or financial institutions would be the largest targets for cyber risk or data breach. In fact, not the case. They're certainly in the middle of the segment there, but professional services in general and then manufacturing make up the top two slots with regards to at-risk industries. Surprising a little bit to me when I saw this statistic updated, the public entity was relatively low there. I think those are probably more well publicized. You hear a lot more about that. But at any rate, that gives you some flavor for the number and types of industries that are predominantly targeted for these types of claims or incidents. As far as a category or putting a band around who is the target for a cyber claim or a breach event, if you will, again, surprisingly, it's not always the big companies. So if we look at this, the largest category, almost 30% of those companies that experienced a cyber event were under 25 million in revenue. So we would consider them fairly, smaller middle market type customers. The second largest category there is the larger companies with over 501 million. And then the bigger band in that middle market segment, I would say at that 25 to 500 makes up, almost 50%. So that is, it was a little bit surprising to me, just from a sense that the small entities here are the ones that really had the higher probability of experiencing a claim. From a particular claims cost perspective, we talked a little bit about these in the overview of what the coverage is, but you can see that almost 30% of the costs through or since 2009 through the end of 2020 involved forensic analysis. And so the first step in responding to any type of cyber claim is going to be to get a forensic consultant in to understand what happened, when it happened, how it happened, and hopefully who was responsible for it. And then we've got to identify, what was breached and who was breached in order to respond to that. So you would, reasonably expect that the forensics expenses on that not only takes a lot of time and effort from the internal customers or the internal employees, but also, from the third-party vendors, and the costs continue to rise there. Third-party costs, typically those are going to be financial damages and other expenses that a breach of your network causes to a third party. Other first-party costs are going to go generally in miscellaneous expenses, business income, those types of things. The Incident Response Council, as I mentioned a little bit earlier, there is a team of people that would help, walk you through this in the event you have a claim. Then credit monitoring, notification, and PR crisis response, a little bit surprisingly, make up a fairly small amount of those costs, because those are typically the ones we hear about. And I'm sure many of you, if not all, have received some sort of email or notification from a healthcare institution or a bank that there was a breach, and you're now eligible for credit monitoring for a year or two because of that. So those types of expenses we see probably more frequently than the others. And then looking just at another average here, the average paid incident response costs, the largest one there is on forensics, again, tying in with the pie chart to the left. And then the second highest being the notification and call center expenses. So it's an interesting dynamic there with the total percentages from a frequency versus severity perspective there. So going away from the trends and what we're seeing in the overall market, or I guess wrapping that up, from an insurance perspective, while this is a tool, risk management certainly is the key piece. And we want to talk a little bit about the key security considerations. These are not recommendations necessarily of things that you have to do from an IT security perspective. These are data that we're gathering and specific questions that our underwriters are asking about to make sure people are aware of and are implementing in their programs. So again, by no means a complete or very broad IT security protocol here, but key things that we're seeing as a recent changes requiring the use of multi-factor authentication for logins and other access to systems. Dual channel confirmations for any changes in EFT or electronic payments. Anytime your internal business partners, whether they be in the accounts payable, accounts receivable, or otherwise, need to make sure that they're validating, not with an email, but with either a phone call or physical visit to whomever gave them instructions to change an electronic funds transfer element of data or electronic payment instructions. We're seeing a lot of claims in the social engineering space. Vendor verification requirements. If you don't have a very thorough vendor validation or approval process, I would encourage you to at least look at that. frequent backups and offsite data storage. What we're seeing a lot in the ransomware cases is that where businesses that have a frequent backup, as frequent as every night, they're able to go back into their system with the help of the forensic support and figure out when their systems were breached and go back to a backup that's prior to that and effectively eliminate the threat and not have to pay the ransom. So we're seeing more and more of that. That'll be, I would expect, a very important part of the IT consultant's role in implementing those types of things over the next, several months. Affirmative security monitoring. We're starting to actually see some of this bleed into the underwriting side, but if you have an IT consultant that's a third-party group, typically they're going to offer you dashboards or scorecards that show, what types of things that you're doing, what type of information activity, dark web monitoring, and any other weaknesses that might be identified in your system, and allows you to go in and either work with your internal or external IT professionals to patch those elements up in the network. And then, of course, third-party IT security support services. As much as we have high-level professionals within our own organizations, we're seeing more and more of those folks rely on third-party groups to continue to increase what security they can bring to their individual companies. And then, last but not least, the cyber risk insurance. Insurance is not an answer by and of itself. But at the end of the day, if we have taken all the proper steps from a risk management perspective, the insurance can be there as a backstop to help the additional costs that might be incurred with this type of a claim. So with that, it's the end of my brief presentation, and I want to invite Jeremy on to help facilitate the Q&A.
Thank you, Greg. If you will go ahead and stop the screen share on your end, that'll give us both full screen. And then Craig has already submitted a question, but for anyone else who has questions, go ahead and put them in the chat box and we'll tie those in. The first question I'm going to ask will actually lead me to Craig's question on the screen. But the first question is, what are the things that you ask or that a business needs to have prepared on their end, on the front end, to start looking at cyber liability? I think it's really interesting. You might think you need a lot of information, but you don't because of AI. And so talk about what businesses need to prepare for, what information they need to have ahead of time to start, taking the next step.
Yeah, so there's really two parts to that, Jeremy. The first is, what information do we need to explore an option within the cyber risk insurance? And then the other one is, what information do we need to get a good pricing, right? So there's a little bit of a different level there. 4 or 5 years ago, I would have said you needed a 12-page application that your IT professional would have dug through and probably painfully completed. Today, we literally need the name of the company, the physical address of the headquarters, their website address, estimated number of employees, and estimated revenues. With that information, many of the underwriters that we work with use artificial intelligence to actually go out and try to ping the domains and see what vulnerabilities they can find and identify in the public realm. They come up with an estimated score of that on typically a basis of 0 to 100. And based on that grade, they can give us indications and ranges for certain limits and retentions and pricing structures. So it's pretty easy to get started. So from a budgetary perspective, if someone's looking at that, it's not hard to get a budgetary indication. As far as obtaining a quote that is meaningful from a coverage perspective and also not overpriced, I would say, just as a general rule, the further along the scale a company is with their IT security protocol, the better the pricing is going to be. So if through the AI underwriting process their score is a 30, pricing, if we can get it, the pricing is not going to be great. If it's an 85, pretty good, and then we'll have some recommendations from the underwriting company on other things we can improve to get the pricing down for the following year.
So this leads to the question with Craig. How do I know if a bad actor is or is not sitting on my IT system waiting to do damage? And that's a little bit more of an IT specialization question, but do any of your insurance carriers partners conduct assessments that will help me identify if I have a potential issue? And so on the front end, they're kind of looking for that. But the question
Yeah.
obviously is, do any of your insurance carrier partners conduct assessments that will help me identify if I have a potential issue?
So I would say not directly from the insurance carrier, but there are carrier partners that are security consultants. And, some carriers, when I say carrier and underwriter, that's a synonymous term for the audience. But when some carriers will offer a premium discount or a premium support if you hire third-party security consultants to come in and do a scan like that. I've had clients use that, and they wanted to do a penetration test at a much higher level than what the underwriting group did. And it was going to cost a reasonable amount of money, but the underwriting group had a premium credit of, a certain percentage of the premium up to a dollar amount based on the total premium that they would help offset those costs. So there are a lot of networks and a lot of preferred vendors or preferred providers that can help with that. But I would say I haven't run into too many that are direct from the underwriting company where they'll come in, do the security assessment themselves and make recommendations themselves. That it really opens them up to a little bit of a professional liability exposure.
Give us a few illustrations. You don't have to name the companies per se, obviously, but a couple of illustrations that have been things you've had to deal with recently or ones that have caught your attention. So give us some illustrations of how all this plays out.
Sure. I think, most notably, you guys have probably heard about the two large ransomware attacks. I haven't dealt with those personally, but those certainly are not out of the norm, where someone got in, took control of a system and held that hostage, if you will. Where I'm really seeing a frequency, probably even more so than in the ransomware space, is what I would call social engineering, or the fraudulent wire instruction or fraudulent instruction. I think another term that's used is fraudulently induced transfer. One specific customer I had, they were in the process of consolidating their operations. They moved their headquarters from Las Colinas to the southeast, and in that process, the CEO was moving homes, or at least setting up another home in the southeast, and was going to maintain, kind of a commuting relationship, at least early on. Through that process, his accounts payable department and HR department got a note from him that said, "Hey, now that I'm here, I've started a new banking relationship. I want to get everything set up with the new financial institution. So please change my direct deposit information." And they did change, message coming from the CEO they're going to execute on that. About a week and a half later, the CEO goes to the HR department and says, "Why didn't I get paid today? And, oh, by the way, my bonus was supposed to be here and it's not there either. What happened?" And the HR person said, "Well, didn't you check the new account that you gave us?" And his answer was, "What new account?" And so that particular situation, someone had gotten into their email system through a phishing scam. Someone in the company had clicked on the wrong button, and they were able to get email credentials and figure out who was in a position of authority and who had the responsibility for changing that type of information. And over a period of months, they shadowed those emails and crafted a very specific email to somebody to make it believable. Another situation, and we're seeing this probably as frequently, if not more, is we had a customer that does fuel trading. And so some of it they take possession of, some of it is through, transferred through a pipeline. But at the end of the day, those bills are due, and they have approved vendor lists and those types of things. Well, they received an invoice, and it happened to be a rather large invoice. And with that came electronic funds transfer instructions that were slightly different than what they had on file. And they unfortunately didn't make a callback confirmation on the change in that EFT instruction, and they wired about $500,000 to somewhere, and it went into a black hole. So wow. Those are the types of things that we're starting to see, and I would say 2-3 years ago they might have been $25,000 to $50,000. Today it's not uncommon to see it, well into the mid six figures on those types of attempts.
And to your point, you're seeing across all industries when you look at professional services and the broad scope. And so the reality is every business of every size, nonprofits included, entrepreneurs included, you have to be vigilant. When something happens, when you realize you have an issue, what are the steps? What's the process to start putting in the claim and start walking and navigating the process?
Sure. So if you have an insurance product that's a cyber risk policy, the first phone call you should make is to the crisis consulting firm that's identified in your policy. That's kind of like picking up the bat phone. Hey, I've had a problem. They can immediately get into the forensic analysis and start trying to get the recovery process on. Second call would then be to your broker and go get the help from the claims reimbursement side. But the first step, if you have that insurance, is to get in contact with the crisis consultant through the hotline. If you don't have cyber risk insurance, the first call I would make would be to my IT security consultant. And if that's a third party, if you don't have either of those, the first call would be to police authorities, because they're going to have some other resources that they may be able to provide to you.
Who makes the call on the ransomware if you're going to pay the ransom or not? Is the carrier involved in that decision? How does that play out?
Sure, the carrier is involved in that decision, but typically it's not a unilateral decision. And I had someone ask me this question actually in a client renewal meeting this morning. They asked me specifically, what's the trend that we're seeing about people paying those ransomware demands versus not paying them? And I'm seeing articles on both sides. I saw a recent article that came out just last Thursday or Friday talking specifically about the level of pushback or the level of denial to pay those ransomware attacks is going to be directly connected to how well you've done your backups and how well you have taken care of the overall infrastructure to be able to cut off the system at a particular date, go back to a prior version and clean that system out to ensure that you don't have any laggards in your network.
I'm always the skeptic too, where it's like, well, if you pay the ransom, but then what if that's not legit and they still don't do what they say they're going to do, and then you still have the issue?
That was exactly one of the points in this recent article. Was most likely that data has already been sold on the dark web, and most likely, you're not going to be able to validate that it's been properly disposed of if you pay the ransom. So,
right, you're in kind of a lose-lose situation. What's something that you've seen going through the pandemic? What's been a shift that you've seen on your end with the carriers and cyber liability and risk management? What's been a shift through the pandemic that you've seen?
Sure. So interestingly, I think a lot of companies, and I get this feeling from most of our customers as we're talking through this, most of our contacts have really felt like they've done a good job putting together remote networking for their employees. And to the extent, I think most companies are going to experience change from pre-pandemic to post-pandemic with regards to flexibility from remote work locations and things like that. From an underwriting community standpoint, everyone was scared about the multiple remote access points, and theoretically that's going to open up exposure for everybody. No one ever knows what security I have at my home on my home Wi-Fi, for example. And while everyone would hope that somebody's got some level of security for access, you have things like there's a tool called a pineapple that someone can literally go into a Starbucks and sit down and put it on a table, and it will scan all of the keystrokes that people are using the public Wi-Fi that's not protected by a VPN or something like that at the Starbucks, any public Wi-Fi. And this pineapple will literally tie to an IP address and will tie to keystrokes along with website addresses. So if someone has that, they can take that information, go download it if they know what to do with it. And I went into Starbucks and checked my bank account one morning, they would be able to go log into my bank account. So that's really the concern from the this new remote working environment is if I'm logging into my company's VPN from Starbucks, there are chances that those keystrokes can be recorded somewhere, and that could create a vulnerability for my business. Realistically, I think the fears that they have not come to fruition yet. But I also think that's a feature of most companies had a lot of diligence and a lot of effort put into, securing those remote connections. So I think some good and bad came of it, right? There's a little more exposure, but I think a lot of companies have done a reasonable job thus far, at least, making sure that we have identified it and trying to protect it with, certain things like VPN networks.
Obviously, with more and more of these on the rise and more claims on the rise, and you see the prolific expansion of it, sadly, how has that helped carriers adjust the way they respond, the response time, their processes? How have the carriers been able to adjust as this has continued to grow and become even more of an issue?
Good question. So there's a couple of things that I've seen with that. Number one, from a response perspective, I think the companies that they engage with as their vendors for the crisis response have gotten better because, the more experience and exposure that they have to that, the better they've been able to hone their skills on response times and response efforts. From an underwriting perspective, I think there's been now enough claim activity or trend over the last decade to help the underwriters really understand where the exposure is and underwrite against that. So those are the comments I shared earlier about multi-factor authentication. Somewhere along the way, someone figured out that companies without multi-factor authentication versus the ones with MFA are very different from a claims perspective. So I think that will help not only the underwriters hone in their underwriting skills and better price risks, but it's also going to help the individual client or applicant for that coverage, because at the end of the day, they will, the underwriter will come back to them and say, well, if you don't do these things, here's your price. If you do implement these other security features, it makes you a better risk. And so your pricing is going to be better. So most people would tend to look at making the investment in securing their systems a little more tightly.
Carry that forward on recommendations. And you touched on this briefly, but for small to medium-sized businesses especially, what are your tips and recommendations on where to start, where to focus so that they can get the best pricing and the best coverage?
Sure. So from a pure, focusing on the insurance perspective, take time. Granted, it's easy to get the indication, right? But there's going to be a lot of subjectivities around that indication. There will have to be an application completed. As you're walking through those applications, if you're finding yourself answering a lot of questions, no, step back and look at that and say, talk to your IT professional and say, okay, should we be doing this? I mean, it's the application very well leans to, if you answer all the questions, yes, you're going to have better rates. Now, obviously, we have to represent on those applications what we're actually doing. But realistically, those questions are asked for specific purposes because that's where risk has been identified. And I think that's really a good playbook to get started and say, okay, are we doing these basic 10 or 15 things from an IT security and network approach perspective? And then, take time, whether it's an internal or an external IT support person, take time to identify the things that you need to improve on and rank them in order of priority, because you're financially probably not, if you're at that point, you're not going to be able to make that investment all in 1 year. You won't have enough time and probably not enough money to do that, because these things can get expensive if you go all in. Now, the other thing I would recommend is, there's a large network of security consultants out there. If you aren't using that or feel like you have an overwhelming amount of security elements that aren't present in your current platform, there are other external IT support services. As a business grows, you're going to get to a point where you simply need that outsourced resource.
What do you say to the business owner, the CEO that says, it's never going to happen to me?
Well, and that's a hard one, because that is a measure of why we buy insurance or why we look at risk the way we look at risk across the board. From a cyber perspective, I think many other lines of insurance coverage, I could probably argue at some level that, the probability of a claim is not here, but the severity is. Cyber risk is the opposite. I think the probability is there and the probability of severity is there. So it really, I'm not seeing it as a matter of if someone's going to get, hacked or attempted to be hacked. It's a matter of when. And I think if those business owners are having real, true, and open conversations with their IT people, they will realize that, they probably have hacking attempts multiple times a day already.
Well, just when you look at the slide that you showed of the average was like 178,000 on the ransoms, and now it's up to 220, like everything is just growing exponentially. So to your point, it's a matter of when and not if. What have been, you mentioned the artificial intelligence on the first question and how the insurance companies and the carriers are really doing their homework on the front end, but what have been some of the innovations that have caught your attention, especially around AI or just in the insurance industry around cyber liability? What have been some of the innovations that have caught your attention that you thought, this is pretty neat?
Sure. Well, I think the first one is really kind of basic, but it took a little while to get here. And that is that, cyber risk has been in this market since the mid 90s. But it's been a very difficult coverage to understand. Most of the forms are very, very different. And they're still different today, but they're more uniform than they ever have been. And there's still new capacity in the marketplace that's, maintaining competitive pricing, as long as our businesses, our applicants are, doing basic things with regards to IT security. Aside from artificial intelligence underwriting, which I think is probably the coolest thing that I've seen, I think the smartest thing the industry has done is actually bring IT professionals into this space and underwrite based off of an IT knowledge, as opposed to trying to teach, I used to be an underwriter, trying to teach me as an insurance underwriter to understand IT enough to underwrite it. And I think they've wised up to the point of, let's get some IT professionals to evaluate the IT risk, and then we'll have the insurance people, price it from an actuarial perspective. So I think, all those things coming together, we're getting some more conformity with the coverages, we're getting some more accurate pricing and retention levels and things like that. And then depending on how claims levels go, continue to go from a frequency and severity will really drive, where we are from an overall cost perspective going forward.
Yeah, I look at it's similar in a way to Tesla and using the artificial intelligence. It's nice to have one car, but when you tap into the network and you can learn from every experience and you can learn from everything that's going on, you can take all those best practices and do a better job of learning, and obviously then providing the customer service and the response time and everything. So it's the more of these that sadly happen, the more you learn, and you can use those as lessons to help. And so I think that network approach, the AI approach, is something really interesting to follow. Once again, if you have questions, put them in the chat box, and we'll go a few more minutes, and then we'll kind of wrap up. But I'm curious, you mentioned you had a meeting this morning. What are maybe one or two of the questions that when you're sitting down with a prospect, a business owner, what are they typically asking you? So what are the questions they are coming to you with right out of the gates?
Yeah, and generally in today's age, what we're finding is it's, tell me about this. This pipeline got hit in the last month, and this big beef company got hit. To your point earlier, Jeremy, they didn't think it would happen to them, and then they're realizing that, man, this happened to some pretty sophisticated companies. What do I need to be doing about this? Or even worse, what coverage do I have today? And if they haven't had that conversation before, or we've had the conversation, but they've decided to self-insure that risk, most of the other policies are now excluding this type of exposure. Your property policy is not going to cover it from a business interruption standpoint. Your general liability policy has long had an exclusion for cyber risk and data breach. And then your other management liability policies, we're even starting to see some cyber exclusions creep into the D&O policies. So it's going to isolate that coverage. Once we walk through the first party versus third party exposure analysis and kind of show them how the project or the product works, It's really a fairly short discussion today because there's enough publicity around what's going on in the world that everybody feels like they need it.
Well, and even going back to your example, you realize how fast those costs add up. PR, public relations, trying to get the word out and communicate, get that messaging, obviously the back end, rebooting the system, the data backup, the infrastructure, obviously the forensics and trying to figure out. And then if there's a ransom on top of like all of that can add up really fast. And obviously you're working on a very short timeline to be able to respond. And so I think that to your point, it shows the urgency, but it also shows kind of what you're dealing with.
Well,
You're
and one
small to
other,
medium-sized business or larger.
absolutely, one other element I would add there, Jeremy, is really it's a soft cost, and that is, I can't think of one of my customers or friends that has enough capacity within their staff for their staff to deal with these types of things. And so, a lot of people have looked to these to the third-party support or to insurance policies to have them on deck if something does happen. Let's bring that group in because we don't have the capacity internally from our other staff to deal with this type of thing, or the knowledge and wherewithal to really understand what to do. So bringing in that expertise and the support from a third-party perspective has been a good thing.
What's something that you think the carriers want the businesses to know? So what, besides the fact that they care and they want to be there to help, what's something that you think the carriers would want the business owners to know?
The biggest message that I'm seeing from the underwriting community right now is, you can do all the security you want at the top level of your company. If you're not educating your employees and running phishing tests and running, some sampling and trying to trick people, it seems kind of weird that you try to trick your employees, but realistically, you need to do that. You need to send them some weird emails periodically and see if they click the button, because unfortunately, statistics will show half the time they click on the button. And so probably the biggest message I think from the underwriting community, other than, they're trying to put, more of the artificial intelligence and the higher expertise in the underwriting and be more accurate with the rating models, is that train your employees is probably the biggest message, because so many of these could be avoided if we simply didn't let them into the system through our email networks and phishing scams.
I'll tell you what, those tests, they're legit. Like we probably get at least one, sometimes 2 or 3 a day. And I'm surprised, like I'll order something online and the next thing I know, I'll get something that very closely resembles. And it's like, hey, click here, your order is da 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 da. And, we need you to reconfirm. And so it's amazing how closely it mimics. But to your point, it keeps you on your toes. And then you go up there and you search and you click on that email address and you realize that no, that doesn't look right. And so then there's a button that says, click here if you think it's a phishing scheme or something. And so then that reports it to the IT department. I think those, to your point, constant training, constant vigilance with your team is so important just to minimize these opportunities. Wrap up on your end with a few things. One is words of encouragement. So obviously we're talking about something that's very serious and, can be a little bit of a downer, but when you talk about words of encouragement and the hope for the future, what puts a smile on your face? What are some words of encouragement, positively looking forward for this?
No, and I appreciate that opportunity, because many times when we leave the room, people are sweating and, and don't have good looks on their face when we talk about these kinds of things. I think 2 things I'd like to leave everyone with. Number one, this can be a very scary element, but take it one step at a time, or one bite at a time, if you will. Engage not only your internal IT professionals. If you feel you've got the exposure or need the support, don't be afraid to engage external parties. There are a lot more affordable resources in the consulting sector today than there were 3 years ago. The other element is, even though we're starting to see some claims trends go up, we're starting to see some severity go up, and we're starting to see a couple of the underwriting markets really dig their heels in from a pricing perspective, we are still seeing an influx in capacity from the underwriting community. So that surplus and capacity will help continue to depress rates from a pricing perspective. And many of the markets that are coming in today are the ones that are underwriting much differently than they have in the past. So the artificial intelligence and the new methodology of looking at that. So I would say, outside of just trying to stay on your toes as best you can, don't get discouraged with this. It can be managed. And the insurance products that are out there, if you decide to purchase that as a risk transfer tool, they are much better today than they have ever been. And they're much more uniform today than they ever have been.
Are you seeing that the carriers, especially for their clients, are they sharing best practices? Are they being proactive in helping their clients?
Absolutely. I think every single carrier that we work with has some sort of risk management portal that they encourage their policyholders to go online and sign up for. Most of them will schedule a certain number of hours of time with your IT professionals and sometimes your HR professionals, but most often your IT folks, to review systems, to evaluate the artificial intelligence information and scorecards that they have available. And some of the markets actually even go as far as, connecting with your network. If you use, for example, a Microsoft product or a Google product as your network management tool, they can set up a connector and monitor your information on a daily or a weekly basis, depending on what you elect, and send you alerts or send your IT people alerts. That's the other direction I see this industry going. Is from an underwriting perspective, is really on a proactive risk management standpoint on the front end to avoid the claims from even happening.
Yeah, nice. Love it. Wrap up with your contact information. Where do we go to learn more about Higginbotham, cyber liability, risk management? How do they get in touch with you if they have more questions?
Sure. Well, I am on LinkedIn. My email is gholden@higginbotham.net. The organization is higginbotham.net. And my telephone number is 405-406-6145. That's my mobile, easiest way to catch me. And I would say, any of the colleagues that I have connectivity with in the Dallas-Fort Worth area that are with Higginbotham that you all know, if you work with somebody on a day-to-day basis, they can reach me as well as part of this practice. So probably the easiest way is either LinkedIn or email.
And the cool news is tomorrow is a big rebranding event for Higginbotham. We get to unveil a new logo, and we also have higginbotham.com now too. So we've got a lot of cool things going on at Higginbotham and obviously cityCURRENT as well. You will be sending out, or we will send out an email through Fort Worth Chamber with your slide deck, correct? So everyone will have that information.
That's correct. And actually, there's a couple of other elements that I'm going to share with the team, and they'll come out to everybody that was registered. It's going to include a couple of articles that I've recently come up with, and a couple of other websites that we typically will pull information from. So it'll have those website addresses and some other reference information along with the slideshow.
Very cool. Well, Gray Holden, thank you, sir. Fort Worth Chamber of Commerce, thank you. We'll give you all a round of applause. So your virtual version, well, there you go. You can hear it through my computer. But thank you, everyone, for tuning in, for being a part of this event. Thank you again to Fort Worth Chamber for hosting, and to Gray and Higginbotham. We appreciate it. And that concludes today's program. So have a great rest of your day and week ahead. Thank you, everyone.
Thank you all.